Hello, hello, hello. Welcome to the Joe Luca Real Estate Show. I am Joe, and I'm your host every Tuesday evening right here on WNRI 99.9 on the FM dial, 1380 on the AM dial. You can also check us out on Facebook Live if we are Facebook friends. But the show's also streamed to LinkedIn and YouTube. After the show, about an hour after the show, JR uploads the show to Spotify as a podcast, and then we rebroadcast the show every Saturday at 1 p.m. So I'm your host. I've been your host. This is my 11th year. I work at a company called Remax Preferred, helping buyers and sellers of residential and commercial property in Rhode Island and Massachusetts. And I love my job. I love what I do. You know, I've been very fortunate in that every week I pretty much bring for the most part, good news, because the market has been so strong and vibrant the past several years. And, you know, my prognostications have been quite accurate. I mean, when people were forecasting, oh, the market's going to turn down, and then the market's going to pull back, I was, you know, steadfast in saying that the market was not going to turn down. It certainly has not turned down. We have been still experiencing growth, you know, accumulation of equity for homeowners. And where I have been wrong is I've been too conservative. You know, the past couple of years, this year and last year, I thought growth was going to slow down to the single digits, like 3, 4, 5%. That's true for the rest of the country at large, but little old Rhode Island and parts of Massachusetts, not counting cities like Boston and you know, Los Angeles and whatnot, you know, we've been experiencing double-digit growth year over year, okay? And even today, you know, the FHA forecast came out for home prices, and it was for month over month, it was up 0.3. They were forecasting 0.2%. So, you know, so we're still experiencing a lot of accumulation of equity for homeowners. And that is a good thing if you are a homeowner. It makes it more challenging if you are a buyer, especially since, and we're going to talk a little bit more about this, you know, if you had the misconception about what you were going to get for a mortgage interest rates, because a lot of people, when they hear that the Fed cuts the Fed funds rate, they mistakenly think that that has a direct impact and would have a corresponding reduction in mortgage interest rates, and that is absolutely not true. What I know is that despite all of this, despite the increasing in equity accumulation, despite interest rates being, you know, pretty crazy, up and down, we've been actually experiencing, we, the real estate professionals in the industry, an uptick in the activity level. Now, this is also counterintuitive, because you would think when mortgage rates are higher, when prices are higher, and going into the winter months, you would think that those would be 3 ingredients to slow the market down, but it's not the case. We're actually noticing a bit of an uptick in the activity level. Now, that being said, the intensity is not like we had before. So a house that goes on the market doesn't usually immediately sell. You typically don't get 10s or 20s of you know, people coming to open houses and things like that. But there's consistent activity and interest in most homes. So we are really bucking the trend, we here in Rhode Island, and we're fortunate for that. You know, I think what we're hearing in the industry is that there's going to be a bit of a boomerang effect, where folks who move to Florida to get away from Rhode Island and get out of the cold weather may be looking to come back because they're getting hit with huge property insurance bills, and then other folks, they just don't want to have to deal with the hurricanes. I mean, they really had, you know, this year and then the past couple of years, they've had a series of hurricanes, which can be really, you know, disrupting. You know, you've got to pack up all your stuff, move out of the house for several days or weeks before you can go back in. You know, if you have pets and you've got kids, and it's a big challenge. And we've been very fortunate here in southern New England that we haven't experienced any crazy weather events like hurricanes or blizzards or, you know, tornadoes or anything like that. So we're very blessed. But anyway, getting back to the real estate issue, there is some chatter that folks may be moving back to Rhode Island to get away from those high homeowner insurance premiums. I mean, people are getting insurance bills for $17,000 a year for a regular home, so that can really put a damper on your enthusiasm for the warm weather. So folks, that being said, we have another super special guest coming this week. He's here in studio with me, my buddy, Dave Campagnone, lender, loan officer extraordinaire with Main Street Home Loans. Dave, welcome to the show.
Hi, Joe. Thank you for having me today.
Good. My pleasure. My pleasure. So Dave and I have been working together. We've got a couple of clients doing deals right now, pre-approving some other folks, and I've got had a lot of respect for Dave because we had a situation I think 2 years ago now, where I had a listing and we had received a couple of offers, and the seller and I decided to go with an offer from a buyer who was using Dave for their financing. Dave had provided the pre-approval, and because I knew Dave did a good job and was very thorough, and lo and behold, it turned out to be very fortuitous because right after we signed the seller signed the purchase and sales agreement, and the seller was transitioning into a nursing home, so he was an elderly person. And right after that, his health went south, and he went into hospice care. And the family was like, "Joe, is there any way we can accelerate this closing date, move it up a little closer, because our dad's health is really declining quickly?" So I said, "I don't know." I said, "I'll call Dave up. I mean, I represent the seller, not the buyer, but I figured I could call Dave directly." And I told Dave, I said, "Hey, Dave, this is a situation. Is there any magic that you can do?" And he said, "Well, Joe, I don't know. It's a Rhode Island housing loan, which means Dave only has so much control, because Rhode Island housing, there are a lot of moving parts in that side of the business, and I'll let Dave talk a little bit more about that." But he said, "I'll do the best I can." A couple of days later, I get a call from the parents. They're like, "Yeah, our dad's going into hospice. He's not going to last. Please, if there's anything you can do, because if he passed away, then that would have really dragged out the whole process, because the house was still in his name." So Dave took out his magic wand, did everything, and worked it. So we got this deal closed, a Rhode Island housing loan, 15 days after the signing of the purchase contract, which is unheard of. Usually it's 30 to 45 days. Is that correct, Dave? I mean, yeah. So Dave, talk a little bit about how you handle clients, how long you've been in the business, and then why you're able to get things moving along on a smooth and even keel for the benefit of your clients, and then also even not your clients, sellers.
Sure. So I have been working as a loan officer for 26 years. Started way back in 1998. And we've had, I've seen it all. I've seen the market start to pick up in the early 2000s, when pretty much the lending was, you needed a hot beat, and that's all you needed. And then we saw the crash in 2008, the slow rebound, and to what we've just gone through, rates dropping to extraordinary lows of 2% to now where we are. That loan that we did close very quickly. The nice thing about, especially about Main Street is the number one Rhode Island housing lender in the state.
Mm-hmm.
We do more housing loans than anybody, so we're an affiliated lender. We're also a direct delegator, which technically means we're a direct underwriter. We underwrite in-house. There are a lot of affiliated lenders that do a good job, but they don't have that distinction, so they have to underwrite in-house, package up the loan, send it to Rhode Island Housing, and have Rhode Island Housing underwrite it. That's an extra process, an extra week, plus you never know what more stipulations, conditions that underwriting is going to hit you with that you're going to go back to your buyers for. So probably a lot of the reason we were able to get it done. In terms of what I do and with my buyers is, again, because I've been doing it so long, I'm able to get, I put together a very good file. So up front, I know exactly what is needed, what is that loan needs to have in there. So when it does go to underwriting, they have all the information to make a decision. It's not getting pushed back. There are some loan officers that don't put together good files.
Right.
And it gets pushed back to the processing and no decisions made, or they suspend the loans, they adverse them and denying them, and as a loan officer, especially working as with realtor partners.
Mhm.
You and I work together. You refer me clients because you know that when I give you that pre-approval, that client's good. You're not going to be
Right.
wasting your time. It really does help, the experience. I'm not saying I haven't made mistakes. We all have.
Yeah.
We learn from them as we go. But Main Street is definitely, been a blessing in terms of our process. There are a lot of companies out there that, try to recruit. They got their CEO in Texas and trying to tell you how to run your business in Rhode Island. Rhode Island's it's very unique market. It's not like the rest of the country. So our company is actually run by sales. All the people that make the decisions are actually producing loan officers, which, so all decisions are made by people that are on the street dealing with it day in and day out. So it really helps.
Yeah.
And ours is, let's give, the best service, speed, accuracy, and get it done.
Yep, and your office is right in Lincoln, so you have your own office in Lincoln, Rhode Island, so it's, a hop, skip, and a jump from anywhere, from Providence, North Providence, Cumberland, Lincoln, Woonsocket, you're right there. And then, of course, so much can be done using technology, where with digital signatures and things like that people can do stuff without even having to come into your office, right?
True, we do. I still love to meet clients face to face. I think just building that rapport is still worth it, but do applications over the phone. We have an online application, e-sign documents. During COVID, you couldn't even go to a closing.
Right.
Anything. I did closings start to finish. I never met them.
Yeah.
Not my forte.
Right.
I'm a people person. I really enjoy that aspect of it.
Yep.
One of the reasons I do a lot of Rhode Island housing loans, some of the people I work with, they you do so much of them, and I'm like, I love the first time home buyer.
Yeah.
I love the excitement. I love the education. They come into it. I know nothing. By the end of it, they can almost tell me how to do the job.
Yeah, that is rewarding. It's very, I say it's good for the soul when you're helping someone buy their home for the first time, especially when it's not a Native American, people who came here from another country, wherever it is, that they never would have been able to buy a home in their home country, whether it's in Europe, Asia, South America, wherever, so it is really rewarding, and I think it's good for the soul to help people like that.
Yeah.
So now earlier today, we were on the phone and you were saying, man, the market's crazy, interest rates are going all over the place, and we've been chatting about this for a few weeks since the Fed dropped the Fed funds rate back in September. We've been seeing mortgage rates go up since before the Fed dropped the Fed funds rate. And today, I just said beforehand, we're over 7% for a 30-year fixed rate mortgage, according to Mortgage News Daily. Now, folks, I always qualify this because you can call Dave. Dave may have a different rate. I use Mortgage News Daily because it's just an unbiased. These rates are for people that are buying a home to live in, a single-family home that have good credit. Sometimes different lenders, like Dave's company, may be able to get you a rate that's a different rate, higher or lower, based on your specific situation. Can you talk a little bit about, Dave, what's going on in the market and what maybe consumers would be interested in learning?
Yeah. I pride myself on being educated and understanding, and it's actually complete opposite. I think from what happens in the market, I should know what is going to happen with the rates.
Right.
And it's doing the complete opposite.
Yeah.
There is no economic news that has been coming out that's driving the rates up. It's a lot of emotion. I really feel that this election is going to, one way or the other, at least calm it down. Does that mean the rates drop? Not necessarily. If there is a sweep of Republicans in the Senate, that's going to be, I think that's going to be a boom one way or the other. You're going to see a big increase in the rates, or you're going to actually see a big decrease. But it's, Friday the 1st, the job claims report comes out. And it's that today was the first day the rates actually kind of improved a little bit in which, again, it's really nothing compared to what we've been seeing these increases, but at least it was moving in the right direction for people. In terms of all these people that have purchased homes from pretty much February of 2022 forward, you know, they're going to be due for a refi at some point.
Mm-hmm.
And you know, everybody kept saying, "All right, it's coming in 2024." Well, now for the election in 2024. Well, no, maybe now we're looking at the spring of 2025. Well, you know, now we never know. You know, having that crystal ball, like, obviously would be great. We all make a ton of money if we knew exactly how to play the market. But I think, you know, it is coming. The rates will settle. I think you will see a settlement down somewhere in the 5% range.
Oh, you think that much? Okay.
I do. I don't know if it's going to be 5.0, 5.5, but
Right, in
I
the
really
fives.
feel that you're going to see that. But I think we're probably pushing more into almost the summer of 2025 before it really happens, unless there's some really economic news that comes out. But you know, there are driving factors on the rates. The 10-year Treasury is one of the
Right.
you know, one of the best indicators of where rates are going. You know, and when those yields are high, so you got to entice investors to buy the Treasury. That's kind of an indicator of rates are going to be higher. When people are buying the Treasuries over and over and over, they can lower the yields, and those yields will then transition more. You'll see the mortgage rates drop. And they're just, I don't know if it's uncertainty in our government and again the presidency, that they're raising those rates to entice you to jump in and buy the Treasuries, and people are not. I mean, when you look back at Obama's administration, it was the complete opposite, but that was because the government was artificially buying the Treasuries to keep the rates low to spot the economy.
Yeah,
to
but
come out of it.
the Fed funds was 0% for
Yeah.
most of his administration. Yeah.
And that was just because and the Fed was, you know, the government was buying the bonds just to,
Yep.
you know, and as soon as they sold, boom, the rates they jumped from almost to levels we're pretty close to where we are today.
Yeah.
So it's nerve wracking. It's nerve wracking for clients, because then you get into clients that say, "Oh, you want, this is where we are today. You want to lock in?" Well, no, I think this is going to happen, and unfortunately, you know, I've had the conversation. I try to tell people, you know, especially now, no matter what you get today, if you're buying your home today, you're going to end up refinancing down the line.
Right.
So, to me, it's, you know, and I've had a few clients that were adamant about not locking in, and you know, and then the market started turning. I'm like, look, we started here. We got to lock in. You're moving the wrong way.
Yeah.
Before it gets out of control.
Yep.
So it's there's just so much uncertainty in this country, and
Yeah.
I really feel that November 5th, I think it will be
Yeah, I think.
a nice little calming.
Yeah, whatever. Because I think one of the reasons, you know, so much of our economy is psychological, and there's so much uncertainty. You know, any subject you look at, if it's politics, if it's the economy, if it's interest rates, you know, all of these things. Yes, they are kind of linked, but you know, they like to have some level of certainty. It's one of the reasons people like to buy a home, because I know I buy a home, I have a 30-year mortgage, my housing payment is going to stay the same. My rent, it's going to go up every year. So if people are very cautious because they don't know what's going to happen with home prices, everybody says what goes up must come down, and prices have been going up for a long time. But I think as a real estate professional, I like to share with people that the reason home prices have increased is because we have more buyers than sellers. And I don't care what you're selling and buying, if you have more buyers than sellers, prices are going to go up. And you know, we are up to, in Rhode Island MLS, as of today, we have about 1,106 single-family homes on the market, which is way lower than where we need to be, even though it's about 400 homes higher than where we were earlier this year, when we were in the high 600s. So you know, we need to really try to, you know, bear in mind what the realities of the situation are, and why do we have, and I apologize for people who listen every week because they've heard this before, but why do we have a shortage of homes? Because we haven't been building enough new homes in not just Rhode Island and southern New England, but nationwide. And there are some places that had overbuilt before the crash, and then they went in the opposite direction, you know, in 2010, 11, 12, and they're still trying to catch up. But in Rhode Island, when you're building, you know, 1,000 to 1,500 too few homes every year, that is a big number. So now we are down so many homes. Even if they started building homes as fast as possible today, it would still take several years to catch up with the demand. Well, Joe, why is there more demand? The population of Rhode Island is roughly about 1 million people, as it's always been. Well, one of the reasons is because the people are becoming adults and creating new households. So, you were counted as a citizen of Rhode Island when you were 18, now you're 28, and you want to buy a home. But there's nothing out there for you. You want to rent an apartment or condominium. There's nothing out there for you. So there are too many renters for the number of rental properties we have available, rental units. So that's why rents are going up. You can spend $2,500 a month on a rental apartment, and believe it or not, that's not a lot of money, because there are other rentals out there, if it's condominiums, houses that are thousands, plural, of dollars per month. Now granted, for $2,500 a month, you're going to have a nice property, but you could be spending $1,800 a month and still have a mediocre property and not a fancy part of town, and it could be a third floor walk-up with gas space heaters. And those are still big dollars, so that's, that these numbers are being driven by the demand. Okay, that's why with purchases of homes, we're seeing multi-generational living, where you'll have the grandparents and their children and then the grandchildren combining incomes, even if maybe one or two of them are pensions or Social Security, to help purchase a home that everybody can live in, if it's a multifamily or a single family that has the capacity for an in-law. Okay, and this is for first-time home buyers. People are doing this. Okay, but they're also doing it for step-up buyers, or older buyers, second home buyers. So this is it's happening. It's happening in all communities in Rhode Island because homes are so expensive. And I just caution everybody, if you say, well, I want to wait until rates come down. Folks, when you wait for rates to come down, I mean, prices have gone up 0.3% just from last month. Okay, that's nationwide. That's not a Rhode Island. I'll bet that number is higher for Rhode Island. It may even be 1%, because we're experiencing 12% increases in home values year over year. So that's about 1% per month. So the median price of a home is, let's call it $500,000, and values go up 1% per month. That means every month you wait, it's costing you $5,000. So interest rates are not going to come down anywhere near enough to offset that amount of increase in the purchase price. Because Dave, how much, for every $5,000 increase in the mortgage amount, how much extra is that per month in a payment, roughly?
If the interest rate is roughly 7%, you're looking at just about $6 to $7 per thousand. So for 5,000, you're looking at $30 to $35
Per month.
Per month.
Right.
So that's why, like, I used to tell buyers, if you're, especially when the market was like multiple bids, like it is, like on some homes it still is. If you really love this house, don't lose it for $2,000.
Right.
That's going to cost you $15 a month.
Yep.
If that $15,000 is technically breaking you, then you're way out of your.
You shouldn't be buying a house.
Yes, you're way out of your budget at that point.
Right.
But yeah, it's unfortunately it's minimal. It really is. But in terms of and when I give those numbers to my clients, I do it more on I do like 5 and 10,000. So for every 10,000, it's going to cost you $65, $70 a month to help. Help them when they do, because again, when obviously anytime I'm pre-approving somebody, it's always okay, estimated taxes, estimated homeowners. Well, you're looking in this area, you're looking in West Warwick is a lot higher taxes than Warwick is.
Right.
Then you get into Narragansett. Some of Narragansett's actually very cheap.
Right.
Unless you're right on the water and the house is worth it. But for the most part, there are certain areas that are good and tax wise.
Yeah. Now, have what type of coaching or maybe coaching isn't the right word, but cajoling do you provide, like, to buyers sometimes if you sense a buyer is a little bit nervous because of what's going on, they're paying attention.
Yeah. The one thing I try to tell everybody is, if you're buying a home today and you're looking to buy a home and possibly flip it in a year, in this market, the uncertainty, you could get burned.
Mm-hmm.
But if, real estate values over whatever you want to go back, 50, 60 years, it is still a pretty linear line,
Mm-hmm.
increasing 3%. Now, the actual values over that line is a roller coaster above and below,
Mm-hmm.
but that roller coaster is always trending up.
Right.
And so, no matter what you invest your money in, if you invest in buying a home, you invest in the market, if you invest for the long term, you win.
Mm-hmm.
Real estate is the one guarantee. In the long term, you will win. And if you look at the cycles of values, it's a 10 to 12, sometimes it'll may push out a little about to a 15-year. But you could buy in this market, and 10 years from now, or 15 years from now, is a most guarantee you are going to sell that house for more than you paid for it.
Oh, yeah, yeah.
And so if you're looking, your primary residence should always be
Mm-hmm.
an investment. It's not something you have to pay. You're either going to pay to rent or you're
Yep.
going to pay to live, or pay a mortgage. So
Yeah.
you're obviously better paying the mortgage and at least building your own equity and not a landlord's equity. So, but again, if you can visualize yourself into that house, okay, this is my first house, I'm going to be there for 10 years. In those 10 years, the amount you have paid down on the mortgage plus the appreciation of the property, you're going to do fine.
Yeah. And the thing is, too, folks, when you're looking at something like this, you have to factor in increases in rent. And the rent will, I guarantee you, will increase because the landlord's expenses increase. The taxes go up, the water bill goes up, the sewer bill goes up, the insurance goes up. So they have to increase the rent to cover their expenses. Even if, they're not refinancing the house and taking cash out where their mortgage payment is going to go up, expenses are still going to increase the longer they own the home. So if you can be in a situation where you own your own home, and every month when you make your housing payment, i.e. your mortgage bill, you are basically eating away at the balance of the principal amount on the mortgage. So that's going to be coming down, and at the same time, again, that linear line is going to be increasing for the value of the home. And the beautiful thing about when you buy real estate in this country, it's leveraged. So let's make it simple. If you're buying $100,000 property and you put $10,000 down, the value of that property goes up 2%. So from $100,000 to $102,000. Well, you basically, on a $10,000 investment, the amount of your down payment, it's now worth $12,000. So you made a 20% return on your investment. That's if you're buying the property for investment purposes. When you're buying it as a residence, and I tell people not to think about the investment component when you're buying a home to live in, because now your housing payment stays the same. You're keeping a roof over your head, and all around you, those rents are going to be increasing, but your housing payment is going to be the same. And the more, the longer people live in their homes, the more pride they have in their home, and they do things to make it, prettier, increase the curb appeal, maybe finish a basement, update it somehow. That also increases the value of the home. So at the end of the day, you're really accelerating your net worth, the increase in your net worth. And that's the main difference between people who rent for 5, 10, 15 years compared to people who own a home for 5, 10, 15 years, is the change in net worth. Because homeowners, it's over 30 times greater than it is for renters. And what's nice about that is that's something you can pass on to your family. That's how you really, that's a big difference maker in this country. Folks, if you're just tuning in, you're listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM 1380 on the AM dial. Quick shout out to our sponsors, Compass Title and Escrow. Anthony Betancourt and his team handle all the closings for our buyers and sellers. They're very good at identifying potential problems ahead of time because, as we always say, surprises in real estate are never good. So if you can identify something that could potentially become a surprise during the transaction, it's better to know what that is earlier and not later so it doesn't prolong the closing. Also, we have Vern Rainville, Public Insurance Adjuster. Vern is licensed by the state of Rhode Island as a public insurance adjuster. He works for you, the property owner. So if you have a claim on your homeowner's insurance, give Vern a call, 484-300-8495. That's 484-300-8495. Vern Rainville, Public Insurance Adjuster. Even if you had a claim that was as much as 2 years ago, Vern may be able to help you make sure that you received all of the money you were due from your insurance company. And this is no money out of pocket from you to Vern. So give him a call, 484-300-8495. Vern Rainville, Public Insurance Adjuster. The best move you're ever going to make is calling G Metz Moving and Storage, gmetzmoving.com. That's the website. You can get a price on a move, or you can actually schedule a move if you go to that website, G, M as in Michael, E as in Edward, T as in Tom, Z as in Zebra, moving.com, gmetzmoving.com. Whether you're moving furniture from one side of the house to the other, taking furniture out of the house, putting it in storage, or moving your whole household from Woonsocket to Westerly or Rhode Island to Georgia, GMETS can help you out, and their prices are very competitive. No job is too big or too small. Give them a call, or better yet, go to their website, gmetzmoving.com. The best move you'll ever make, the premier mover in southern New England. So, thank you to our sponsors. If you are just tuning in, our special guest tonight is Dave Campagnone from Main Street Home Loans. Dave is a loan officer, has been in the business over 20 years, lots of experience working with all kinds of mortgage sizes, types, situations, and whether it's an investor, first-time home buyer, step-up home buyer, wealthy home buyer, jumbo loans, Dave can help you out with all of that. Dave, talk to us a little bit about the jumbo loan programs. How are those different from a regular mortgage loan?
Jumbo loans are, they're a little bit riskier for banks to lend. So, pretty much what is an interest rate? An interest rate is a risk factor.
Mm-hmm.
That's how they do it. So jumbo loans predominantly will always have a slightly higher interest rate. As of January 1, I believe they just increased the jumbo loan limit in Rhode Island to $795, I think it is.
Which is the median price is 500, so that's not that jumbo anymore. 'Cause I think it was 600 when the median price was 200. So
I mean, it was 417, and it's just slowly crept up and crept up. So January 1st, I believe, I got to double check, but my positive it's going to be $795.
Mm-hmm.
Usually with the jumbo loans, like I said, it's not like a first-time home buyer type program. They do look for about a 10% down payment. They do look for pretty decent credit. They will look for reserves.
Mm-hmm.
3 to 6 months minimum on a lot of them. Some of them even more. Especially when you start getting into the higher loan to value. So if you're putting, there are some jumbos that you can actually do at 5% down.
Wow.
But when you get down to the 5%, they also want to see 6, 12 months reserves.
Mm-hmm. Now, so explain to our listeners, what does that mean and to the consumer when they're looking for 6 months or 12 months reserves? What does that mean?
Reserves of the mortgage payment. So that's so they call it PITI, P-I-T-I, principal, interest, taxes, and insurance. So your principal and interest is your fixed portion of your loan. Then you take your property taxes, you divide that. Your taxes are $6,000 a year divided by 12. That's $500 a month to your payment. And your homeowners was $2,400. That's $200 a month to your payment. Add that all together. That is your PITI payment, and you need 6 months reserves of that number.
So is that something that the consumer keeps in their savings account, or does it go in an escrow account?
It is not touched. It's not frozen. Just show me you have it. Once you close, technically they're not going back to look to make sure you still have it down the line.
Mm-hmm.
But they don't. Once you close, that's the end of it. But in order to get to that closing table, you have to show you have it.
Mm-hmm.
there are some loans that get a little aggressive where they allow that to be gifted, but
Mhm.
for the most part, they want to see that seasoned
Right.
in your account at least 60 days.
Mm-hmm. Yeah, that's what seasoned means, folks. Keeping the money in your account for a period of time. In this case, 60 days.
Source or seasons. Like you either source with or deposit. Because again, I tell clients all the time, oh, I got 10,000 cash. Well, you can't just put it in your account.
Right.
The banks, you can't prove where the cash came from.
Mm-hmm.
So, with something like that, if it is cash because you don't believe in banks,
Right.
then you've got to believe in the bank for a 60-day period, and you're not even looking at closing on a loan until 75 days
Yep.
pass, because essentially the lender does not want to see that deposit.
Mm-hmm.
So you got to kind of, this way you show 2 months banks and your average balance is what it should be.
Yep.
So when you have $1,000 and all of a sudden now you got 10,000 and you got a $9,000 deposit, where'd it come from? Oh, it's just in my mattress.
Yeah. Doesn't work.
Unfortunately, there are down payments that are not acceptable.
Yeah.
You can't take a cash advance on a credit card.
Right.
That is not an acceptable down payment.
Mm-hmm.
And the lenders also like, okay, did you got this cash, but you actually have to pay it back? Is it costing you $500 a month to pay this back to somebody? Well, if you're paying $500, can you afford the mortgage payment?
Right.
So that's why they really, cash is one of the worst things you can do for a mortgage.
Yeah, and you mentioned about getting a cash advance on a credit card, things like that. I occasionally will get calls from people who, I look, I'm an entrepreneur, I'm a capitalist. I think it's great, but sometimes people they think that they're too smart for school. I mean, would the seller accept creative, okay, what is your definition of creative? How are you going to structure this? And essentially, usually it involves something where the seller sells the house, but the seller keeps the existing mortgage in their name, and then takes a second from the buyer, and then the buyer has to only put a deposit down based on the second mortgage. And I never advise my clients to go with something like that, because that could be an appropriate structure for a transaction at a different point in the business cycle where we're not there now, number one. And number two, when it's not a residential home that someone's going to be living in. Back at a lot of these scenarios came during the 90s and 2000s, when it was really the Wild West. Really the Wild West. I mean, that was when we had those ninja loans and no doc loans. That was a thing of the past long ago.
Surprisingly, those loans are back. They're nowhere near like they were, where it was
not ninja, but the no doc.
Yeah. They actually have them, but they, on a primary residence, it cannot have a prepayment penalty. It has to be a 30-year fixed rate, so you can't get an adjustable. And all those loans now, you have to have good credit, and they're not lending like they did in 2005, where it was 100% financing.
Right.
To do a no-doc loan, because there are people that really do need that product. You're a self-employed cash business, you really don't show enough. But those down payments, 20-25%. So they're making you as a buyer put a lot of skin in the game. So if you do default, and the bank does have to foreclose, they're going to be able to recoup their money, and that you're less likely to default if things really went bad in your life. You're going to sell the property to try to recoup your 20-25% down payment.
Right.
So, and it's definitely, they call it, in today's world, they call it non-QM. So you have subprime lending back in the early 2000s.
Yep.
So if you get a conventional mortgage today, it's a quality mortgage, a QM, and now you have non-QM, non-quality mortgage.
Yeah.
And then you were talking about all that creative financing. Like I said, you got to, where you got to be really careful of that is, you talk about, you probably in the show, you talked about private lenders. You get private lenders that will lend on properties that the banks just won't, but private lenders cannot lend on primary residence because you fall over those usury laws. It essentially becomes loan sharking. And, and no private lender is going to risk going to jail because he gave you a 12% interest rate on a primary residence. They have enough money. It really is not the last thing they want to hear.
It's interesting because I haven't checked recently, but up to a few months ago, I was surprised that the private lending rates have not really gone up compared to where they were when mortgage rates were 3%.
Yeah,
And I was surprised at that.
Yeah, you're right. Most private lenders are still getting about 12.
Yeah.
But one of the things that has hurt them is these non-quality mortgages are one of the loans is called those debt servicing mortgage. You can buy a 3-family. So as an investment property, they have their loans. They've kind of done like commercial properties where it's debt service instead of your
Debt service coverage ratio.
yes,
Yeah.
instead of debt to income. So when you buy your property as a primary, it's your debt to income ratio. Where does the rent pay for the property? So those programs are available to investors. So if you're buying something with a private lender, the private lender usually wants 20% down. You can get these loans with 20% down. And instead of paying 12% and a few points to the private lender, you're paying 8%. No, they've come down a little bit. They were even higher, but they've come down to about 8.5%, 9% with maybe a point. So,
Oh, wow.
So it's kind of cutting out. Now, again, those properties still have to be livable. So the private lenders really, their niche now is that 3-family that's been stripped. Somebody broke in, saw all the copper, there's no kitchens, there's no heat. No bank is going to lend on that. And unfortunately, with all the rehab loans out there, I haven't come across one. An investment property rehab loan. It doesn't really exist.
Yep.
So it is, I mean, again, those in the private lenders, they make their money, but it has a good, if you can able to score that property, get it fixed up, as soon as that property is livable, that's when I'm jumping in, refinancing and paying off that private lender. Because the private lender, he doesn't want to own that. They don't want to lend for 30 years. They want 6 to 12 months max. Because they want to just keep rolling their money over and over.
Yep. Yeah. Now I had heard, and I'm curious to hear what your thoughts are on this, because in other parts of the country that are not experiencing equity accumulation rates like we are here, i.e. increases in the median price of a home, they're starting to notice values decrease, and the number of distressed sales, homes that perhaps are in foreclosure, pre-foreclosure, short sales, those numbers are increasing. And some folks in the industry, even in this state, are saying, yeah, that's coming here, that's coming east, everything starts in California and it comes east. And yes, I do agree that a lot of things start in California, but I do not agree that we are going to see a statistically significant increase in distressed properties. Because look, if you bought your property just 2 years ago and you're not making your payments now, and you lost your job, your spouse lost his or her job, and you just have no way to pay your mortgage, you could turn around. I mean, the house is probably worth 15 to 20% more than what you paid for it. So even if you put 100% financing mortgage on that property, you could still make money if you sold it now and just drop the price a little bit below fair market value, and it will sell very quickly. So I don't see that, now there are some situations where people are not going to be able to benefit from that. So yes, those homes may become distressed sales, may get foreclosed on. But I just think, part and parcel, we're not going to see big increases. If we have the foreclosed property rate that's about between 1% and 2% of all listings, if that doubles, in other words, that you have a 100% increase, so now you're going to be, if it was 1% to 2%, or if it's 2%, now you're going to have 4%. Back in, during the crash, it was like 50% of all listings were distressed sales. And oh, by the way, we didn't have any buyers back then. We have more buyers than we can shake a stick at right now. So it's a very different situation. And again, I'm talking about southern New England, Rhode Island specifically. So I don't see the increase in distressed sales or short sales or foreclosures going up in a noticeable amount. I mean, I think, I don't know if we can, let me see if I can pull it up quickly, how many single family homes that are foreclosed on or that are on the market right now. I'm going to put my glasses on for this, but I'm sure it's a very low number. So let's see, bank-owned homes out of 1,106. There are 14 homes that are bank-owned. So that's a little bit more than 1%. I was pretty darn close, but it's not even 2%. So 2% would be about 22 homes. So we do not have a lot of foreclosed properties. And the thing is, if we were to look at these 14 properties in the state of Rhode Island that are single-family homes that are foreclosed on, let's see here if we can get this to cooperate. Okay, the prices range from, let's see, a low of $222,000 to a high of $549,000. So you're not going to get foreclosed properties that are priced in, you know, 60, 70,000, 100,000, or even 150,000. I mean, here we have a house in Providence that's foreclosed on, and it's priced at $222,000. And you know, investors take notice. Bank owned cash or private financing only. So this means the house, it's not livable, okay, or barely livable, and you can't even, in this case, go on the property to look at it. Okay, it's 3,100 square foot property, and it appears that it needs a lot of work. And I can guess that that's the case because there's only one photograph of the property, and it's from across the street. So there's a very good chance that this house needs a ton of work. So you're buying it for $220,000, folks, but if you have to dump another $100,000 into it, and how long is that going to take to get the work done? Number one, but number two, you're buying a house with an occupant in there that you can't look at. How long is it going to take you to get that eviction? Maybe it's 3 months, maybe it's 6 months, maybe it's a year. That's before you can do anything. So that's typically what happens, or not typically, frequently that's what happens with foreclosed properties. So it can be a real challenge. So my point is, I do not, as a prognosticator, I'll put my crystal ball out right now. I do not see the number of distressed sales, foreclosed properties, REOs, whatever term you want to use. I do not see that number increasing significantly because, again, we have so many houses and that are on the market that have been increasing equity every year. We have more buyers than we need for those homes right there. These houses don't qualify for a mortgage, so it's really a different type of a situation. Dave, do you have any thoughts on that?
I have realtor partners that I've worked with that do a lot of foreclosures. Yet their bread and butter is getting the foreclosures from the banks.
Yep.
And for the last couple of years, they've been telling me, they're coming. I'm getting inundated doing a BPO. A BPO is a broker price opinion.
Mm-hmm.
So they're doing all these BPOs on these properties that these banks are on the verge of foreclosing, and then they're not coming through. And I'm asking, like, you're doing all these, where are they going? And he actually said what you said. The banks are actually advising the people, instead of modifying their mortgage or anything, sell.
Yeah.
Just sell. You're gonna get out of this. You're gonna pocket money. You'll pay us off, clean and fine,
yep,
and get out. And that's why they're not coming on.
Yeah, because banks don't want to be in the real estate business.
No, and it costs so much to foreclose.
Right.
It's a $10,000 to $15,000 bill for the bank.
Yeah.
To actually get, Harmon Law or these foreclosure attorneys you see all the time.
Yeah, and I had, back in the day when we had all these foreclosures, at that time it cost a bank 1% of the mortgage balance every month after they had foreclosed on a house. So doing it, paying the taxes, the insurance, the maintenance, if it's snow removal,
everything,
grass cutting, all that nonsense. And from a bank's perspective, okay, I foreclose on this $222,000 house. Let's say that they owe $222,000 on it, so that's going to cost the bank $2,000 a month after they foreclose, or in this case, since they've already foreclosed. And banks would really rather not have to deal with that, because then they get the black eye in the community. People don't like them. Oh, Bank of America foreclosed on my neighbor's house and made that family homeless, or whatever the situation is, and they don't want any bad exposure. They've had enough of that.
I remember talking to a lender, big type high lender, and he was like, "Yeah, we I think I had somebody call me that wanted to finance a church, and I couldn't find anybody that would do it." And I was like, "We don't let on churches." He goes, "If they don't pay, how bad do we look in the community if we foreclose on a church?" He goes,
Right.
"Absolutely, we just won't touch them."
Yeah.
And it's true. Like, that's the last thing you want to do. Like,
Yeah.
God forbid the church, they couldn't pay their taxes or tax sales or whatever. It's just,
Yeah. I've noticed that, I've worked with folks, and a lot of times these small churches, I mean, there will be someone in the church, in the congregation, who has a significant financial capacity that will essentially guarantee the loan to buy this little building where they can meet every Sunday and worship, But something short of that, yeah, it's a no-win proposition
Not
for the lender, So, folks, you're listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM 1380 on the AM dial. You can also catch us on Facebook Live, LinkedIn, and YouTube if you look for the Joe Luca Real Estate Show. And you'll be able to see the show and see what we look like when we're, why I have a face for radio. And but we also rebroadcast the show on Saturdays at 1, and then it's uploaded to Spotify by my intrepid producer Johnny, about an hour after the show. Okay. Quick shout out to our sponsors, Anthony Betancourt and Compass Title and Escrow. Anthony and his team do a fantastic job taking care of our buyers and sellers. They have legal attorneys on staff and some great paralegals as well. Pleasant, easy to deal with, knowledgeable, and experienced. GMETS Moving and Storage, gmetsmoving.com, whether you're moving furniture from one side of the house to the other, moving from Woonsocket to Westerly, or from Rhode Island to Georgia, GMETS, the best move you'll ever make. Just check them out at gmetsmoving.com. That's G as in George, M as in Michael, E as in Edward, T as in Tom, Z as in Zebra, moving.com. The best move you'll ever make is GMETS Moving. And then also, of course, Public Insurance Adjuster Vern Rainville. He works for you, the property owner, not the insurance company. So if you have a claim or you think you have a claim, even if it was as much as 2 years ago, Vern may be able to help you out, but you have to give him a call, 484-300-8495. That's 484-300-8495. Vern Rainville, Public Insurance Adjuster. You don't have to, you can call him up, ask him questions. He'll ask you a few questions and see if he can help you receive all of the money that you're entitled to based on your insurance policy. That's Vern Rainville, Public Insurance Adjuster. And he's a Northern Rhode Island guy. I know it's a 484 phone number, but he lives right here in Rhode Island, and he gets back in touch with you within 24 hours. So do not hesitate. Give Vern Rainville a call. So this week I want to thank Dave Campagnone from Main Street Home Loans. Dave's one of my lending partners. We do a lot of work together. Does a great job. He's a great guy. Dave, if someone wants to reach out to you, what's the best way, either a social or a phone number for them to reach out to you?
Yeah, my cell phone is literally the only number I give out. That phone is on me. It's unfortunately more important to me than my kids. My cell phone is 401-413-9619.
Yeah, people can call you with that number.
I'm trying to think of, I unfortunately am not like the crazy social media guy that I just
old school. That's great.
Yeah.
Texting or voice on your cell phone.
Text, email.
And his office is right here in Lincoln, Rhode Island, so he's easy to get to if you've got to bring documents in, but you can also upload them from their app. So, smartphone friendly.
Yep.
Okay.
Absolutely.
So, folks, we are going to be back next week, same bat time, same bat channel, right here on WNRI 99.9 FM, 1380 AM. If you have any questions, me, your humble host, you can give me a call. I forgot to give out my phone number, 401-409-5030. If you want to sell a home, or you know someone who's thinking about buying or selling a home, please give them that number, 401-409-5030. We're going to have a great home coming on the market right here in Woonsocket, a nice colonial that is coming soon. Thanks. Take care, everybody. Bye-bye.